With rumblings of more banks possibly going under, the financial system pushed to the brink, and people feeling like something isn't quite right, savers are nervous, and rightfully so, that their money is safe. And we just had the FDIC, the Federal Deposit Insurance Corporation, come out and say that bank deposits fell for a fifth straight quarter in Q2, which is not good.
No, it's not.
So it's not surprising that we're getting asked if annuities are a safer place to stash savings because they're offered by an insurance company as opposed to a high yield savings account offered by a bank.
Yeah, the outflow of deposits from banks just shows how uneasy people are. And you
Yeah.
can't blame them after we had three major bank failures earlier this year. You got Silicon Valley Bank, Signature Bank, and First Republic Bank.
Yeah.
So in order to answer this question, I want to start by comparing the risk and the guarantees of savings accounts versus annuities to help you understand the safety of each one of these products.
All right. Sound good. Let's get to it then.
Okay. FDIC-insured savings accounts provide a high level of safety because they guarantee the principal amount up to the specified limit, regardless of the bank's financial health. Okay. The current limits are $250,000 per depositor, per FDIC-insured bank, per ownership category. Deposits held in different ownership categories are separately insured up to at least $250,000, even if they're held at the same bank.
Okay.
But there's still a risk of bank failure, especially in times of economic crisis, which it feels kind of like we're stepping into right now, right?
Yeah, it does.
So you got FDIC insurance helps protect the deposits in case a bank becomes insolvent. While deposit insurance provides protection up to that specified limit, exceeding that limit can result in losses.
Well, except for the fact that no one saw losses if they had over the 250,000 threshold in Silicon Valley Bank, Signature Bank, and First Republic Bank.
Hate to say it, but that's total BS, because what they did is they protected the wealthy corporations and big money because that's where they had their money.
Yeah.
That would not have happened if it was a small branch on my local corner and that bank only had one branch.
No, it wouldn't have. And as we've covered in other videos, a real concerning factor here is the FDIC doesn't have the money they need to cover all deposits under 250,000 should enough people run on the banks.
Yeah, that's pretty troubling to say the least.
Yeah. Yeah.
Okay. So let's get back to it
Okay.
here. As you mentioned in the intro, annuities are offered by insurance companies, not banks.
Mhm.
So when you purchase an annuity, you enter into a contract with that insurance company.
Right.
The safety of your investment depends on the financial stability and the credit worthiness of that insurer. If the insurer encounters financial difficulties or becomes even insolvent, your guaranteed payments may be at risk. Now, what we'll do is we'll cover that actual guarantee of annuities in a few minutes, so hang tight there.
All right. So what I'm hearing you say here is it's essential to research and choose a reputable insurance company before you sign an annuity contract. Correct?
Yes.
Okay.
Yes.
So here's my question. How does one go about determining the safety of these companies?
Okay. There are annuity rating companies that assess the financial strength and the stability of these insurance companies.
Okay.
These ratings basically provide us as investors with valuable information when considered purchasing an annuity. And some of the best well-known annuity rating agencies include AM Best, Standard & Poor's, and Moody's.
Okay.
So insurance companies are also regulated by state insurance commissioners to ensure that they can meet their financial obligations for products sold in each one of those states. You need to check with each one of your state commissioners as well to see how safe an insurance company actually is.
So there's really two levels here. One are the rating agencies, and the other one is the state insurance commissioners.
Yes, definitely.
Okay. All right. So what is actually guaranteed if the insurance company that I have an annuity contract with fails? Is my deposit covered from loss?
Your deposits are guaranteed through what's called the State Guarantee Association.
Okay.
So state life and health insurance guarantee associations are state entities in all 50 states, Puerto Rico, and DC, and they protect policyholders of an insolvent insurance company. They provide a safety net for their state's policyholders, ensuring that they continue to receive coverage up to the limits spelled out by that state law, even if their insurer is declared insolvent.
Okay.
All insurance companies, and there's a few exceptions, they're licensed to sell life or health insurance and annuities in a state must be members of that state's guarantee association.
Okay.
When an insurer fails, the State Guarantee Association will provide coverage of at least $250,000 in present value of annuity benefits, including the net cash surrender withdrawal values. And there are some states that actually cover more than that limit.
So this is, the equivalent of FDIC insurance, correct? If you've
Kind
got
of,
it there.
but at a different level. Yep.
Okay, so why haven't I ever heard of this?
Most
We
consumers,
talk. I'm sorry. We talk a lot about annuities, and I know a ton about them, and I have never in my life heard of this.
most consumers don't know that the guaranteed coverage available in their state, and here's why.
Okay.
The National Association of Insurance Commissioners, which is the NAIC, which is the chief regulatory body overseeing all insurance activity in the whole nation, has specifically prohibited insurance companies and their agents from advertising the existence of the State Guarantee Fund Network.
Wow.
What that means, as an advisor, I was never permitted to advertise this guarantee and couldn't speak about it unless a consumer asked me first how their annuity was guaranteed or insured.
Well, so much for full transparency and disclosure in our financial system. Jeez,
Yes.
I'm going to just say wow and leave it at
Yeah.
that.
Yeah.
All right. I have one final question, Brian, before we wrap this up. Are
Okay.
annuities a safer place than banks to save and protect your money?
Okay. They both have $250,000 guarantees per account per individual, right?
Right.
The question is, do you trust your bank or your insurance company more? Answer that, and that's the answer to your question.
All right. Well, thank you for your transparency on that. I appreciate it. Here's the deal. If you like this content of this video, hit that like button, help us grow this channel. Don't forget to subscribe and leave a comment. Let us know where you're stashing your cash, even if it's under a mattress. We want to know what you're doing with your money right now. Also, like I said, started at this video, there are rumblings of things aren't so right in the banking system. So if you want to know more about FDI insurance and all that it covers, we've done a video on it. We talk about credit unions, IRAs, trusts, and even brokerage accounts and what's covered and what's not. Go check that out. It's going to be in the description and the video, the pinned comment below. All right. Thank you so much for this, Brian. Appreciate it. And thanks to everyone who watched.
Thanks, everyone. Have a great day.